ARK Invest's trading data is in for the month, and holy moly, what a crazy month it's been. Volatility is around the highest it's been since March of 2020 on the back of record high inflation, the Fed planning to raise interest rates, and the threat of war between Russia and Ukraine. Oh yeah, and then that conflict actually breaking out. On top of that, it's earnings season. It's hard to get a handle on everything getting priced into the market right now, but it's clear that we're in a major window of opportunity for investing. I think it's really important to track what ARK Invest is buying as everything keeps trending downwards. So in this episode, I'm going to highlight what the absolute heck is going on in the markets right now and show you what ARK Invest has been buying and selling as a result. Your time is valuable, so let's get right into it. Let's start by talking about Russia and Ukraine. I'll keep it brief, and as always, I'll cite my sources in the episode description below. Ukraine and Russia have a long and complicated history. Ukraine was a part of the Soviet Union before its collapse at the end of the Cold War. When that happened, Russia lost a significant amount of economic power and respect on the world stage. Vladimir Putin wants to reclaim those things, so he's been trying to reassert Russian power over former Soviet republics like Belarus, Moldova, and Ukraine. Vladimir Putin believes that Ukraine and Russia are still one people, and in 2014, Russia invaded and annexed the Crimean Peninsula from Ukraine. Not all Ukrainians agree. For example, an increasing number of Ukrainians are speaking their own language. Also, people in Ukraine appear to be aligning more and more with the West over time, including being more supportive of joining the EU and aspiring to join NATO, the North Atlantic Treaty Organization. The reason to call out NATO here is because of Article 5, which states that an attack on any one NATO ally is an attack on all of them. Clearly, Russia doesn't want NATO to expand towards their borders and explicitly called out the US and NATO to prevent Ukraine from joining. Again, there's a lot of history here, but it's worth calling out that the situation has been brewing for a long time. Late last year, Russia started gathering around 200,000 troops along Ukraine's borders. Then 2 days ago, on February 24th, Russia invaded Ukraine. So this threat of conflict and the conflict itself is one thing spooking the markets and shortening investment time horizons. Since then, Biden and others have introduced plans for additional sanctions, and Germany halted the Nord Stream 2, which is a massive natural gas pipeline running from Russia to Germany. Russia is the largest supplier of natural gas to the continent, supplying about 40% of Europe's natural gas. They're also a major exporter of oil, which leads me to the second thing spooking the market. While Russia's gas and oil haven't been sanctioned yet, fears that they might be have already spiked prices of both gas and oil. When the Fed says it tries to keep inflation at 2% per year on average, one measure they're talking about is the Personal Consumption Expenditures Index, which includes the costs of commodities like oil. Hopefully you can see the snowball effect here. The threat of conflict increases uncertainty, which drives the value of long-term investments like growth stocks way down. The conflict also increases commodity prices, so everyone's dollar is weaker. That drives liquidity down, which drives the value of long-term investments like growth stocks way down. Increased commodity prices are one way we measure inflation, which the Fed is trying to curb by raising interest rates. Raising interest rates drive the value of long-term, well, you get it. So the world is scarier, the dollar is weaker, and there are less dollars to go around. Keeping up with all the individual news points can be exhausting. But if you want to be greedy when others are fearful, and fearful when others are greedy, you first need to know when others are being fearful or greedy. The American Association of Individual Investors Sentiment Survey asks its members the same question each week. What direction do they feel the stock market will be in the next 6 months? This is why I think investors have such a major window of opportunity right now. Keep in mind that on average, the markets go up over time. So the average sentiment is about 38% bullish and about 31% bearish. This past week, 53.7% of the market was bearish, and just 23.4% had a bullish view. Actually, bearishness has been the highest it's been in over a year. A week before that, bullishness was at a yearly low of under 20%, and far more people were undecided. So basically, people have been moving from neutral to bearish on average, as they've been digesting all of the news that I just talked about over the last month. That makes now a great time to see what ARK Invest has been buying as others are being fearful. This data is even more significant than it seems. Bearishness has hit a 4-year record high, and bullishness has also hit a 4-year record low in the past 2 weeks. The stock market is decidedly fearful right now, and a lot of people are fleeing to safer assets like bonds. But what if there was another asset class that had both a low correlation to the stock market and can still generate solid returns? The partner for today's video is a great way to do just that. Masterworks.io is the only platform that lets you invest in physical, multi-million-dollar paintings without breaking the bank. According to a recent report by Citibank, fine art had the lowest correlation to the stock market of any major asset class, and that's exactly what we're looking for as news on rising interest rates, inflation, and the Russia-Ukraine conflict continue to drive growth stocks down. Also, according to Citi, contemporary art prices have almost tripled the S&P 500's total return from 1995 to 2020. That's way more than you thought, right? Another thing I really like about Masterworks is that they're really focused on the investment, not just the art. Their team of analysts use proprietary data to identify artists whose work would produce the best risk-adjusted returns. That's important. Then they acquire paintings by these artists, file the artwork with the SEC, and then securitize it. That way, regular investors like us can go to Masterworks.io and buy shares of multi-million-dollar art just like we buy stocks today. Just a few days ago, they sold an Albert Oehlen painting, returning almost 34% to investors after all costs and fees, and that painting was initially offered in January of 2021. So I reached out to Masterworks, and they're giving you VIP access to their latest offerings, including a newly acquired Picasso painting. I'll leave a link to that exclusive VIP offer for you in the description below. Like I said, the stock market is decidedly fearful right now, so looking through ARK Invest's trading activity over the last month should reveal exactly what Cathie Wood buys when she wants to be greedy. Let's get into it, starting with Cathie Wood's top 50 positions when you combine ARK Invest's 6 actively managed funds. Each row is one company, the rows are ordered by the size of Cathie Wood's position in that company, and each position is colored by its change in size in February relative to the change in ARK Invest's assets under management. So ARK Invest increased their total share count in Tesla by 12% since the start of February, but Tesla's share price is over 5% lower, so ARK Invest's total dollar amount in Tesla only went up by about 6%. Let me point out something about ARK Invest's trading activity here because I've been seeing a lot of buy high, sell low comments lately. If we zoom out on ARK Invest's trading activity around Tesla over the last year or so, we can see that Cathie Wood's sales of Tesla shares line up really nicely with peaks in its price. When Tesla's stock price crashed by about 30% from its peaks in last February, ARK Invest bought that dip. Then she sold a chunk of her position as the stock rallied in May. Then, as the stock price climbed back to $700, ARK Invest kept their position size relatively steady. It was only after Tesla stock really started its massive run-up that ARK Invest decided to sell accordingly. And now that Tesla stock is well under $800, Cathie Wood is starting to again buy the dip. Basically, what we want to see here is the blue share count line move in the opposite direction of the green share price line. This strategy is called buy low, sell high. Is ARK Invest perfect at timing the market? No, but I do think that they're doing pretty well with their biggest positions. Speaking of which, if we reorder ARK Invest's top 50 positions by the change in share count, we can see what they've been buying and selling. So, over the last month, Cathie Wood has almost tripled her shares in C Limited, ticker symbol SE, and it jumped up 20 ranks as a result. C Limited is now ARK Invest's 21st biggest position overall. If we check out ARK Invest's trading activity around C Limited, we can see that Cathie Wood started selling C when it started rallying north of $300. This is a big sellout of C Limited shares. And now that shares of C Limited are under $175 a share, Cathie Wood is loading back up. It looks like Cathie Wood is really happy buying C Limited shares anywhere under $175, meaning she thinks it'll return to its peak of $350 over the next 5 years, which would roughly be a doubling in its share price. We know that doubling every 5 years is something that ARK Invest goes for, but it's really cool seeing it in the data itself. By the way, C Limited is the top position in my own public portfolio, and their next earnings call is scheduled for March 1st, so I'm excited to see what shakes out. Speaking of earnings, Cathie Wood also bought 75% more shares in Roblox, ticker symbol RBLX. Roblox reported earnings in the middle of the month, and their stock price collapsed by over 25%. Their earnings presentation showed that their Q4 revenue grew by 83% year over year. So they're seeing steady exponential growth on their revenue. Their engagement across the platform has grown by almost 30% year over year, and that's on the back of crazy growth during the pandemic. Yes, growth is definitely slowing down, but they're now much better positioned to handle the world reopening and competing for their audience's attention. Just look at how much growth got pulled forward during the pandemic. All of this excess growth in Q2, Q3, and Q4 is growth that got pulled forward from future years. And it's crazy to see that they still grew on top of that in 2021. I think the reason the stock crashed so hard is because of their average bookings per daily user. Bookings is a metric that tracks the purchases of Robux, the digital currency of Roblox's ecosystem. The average amount of Robux purchased per daily active user actually fell by 10% year over year, but again, that's being compared to Q4 of 2020, which was at the peak of the Delta variant of the pandemic. After all that growth in 2020, the fact that spending on Robux actually only fell by 10% is actually making me really bullish on the long-term vision of Roblox, and that's before even getting into things like their expansions into new demographics. Obviously, ARK Invest sees the same thing, which is why Roblox is now their 27th biggest position overall. Just for kicks, let's check out Cathie Wood's buy and sell activity around Roblox. Since many people call this stock a classic stay-at-home momentum stock, did Cathie Wood fall into that same trap? Spoiler, no she didn't. She started accumulating Roblox when shares went public back in March of last year. Then she bought some shares when the stock dipped in April. She held steady when the stock rallied in May, and then she sold some shares right before the start of June. As you can see, a lot of her buys actually are timed well with the stock going down in price. Then she held steady through the volatility all summer. Then, as Roblox got cut in half since last November, ARK Invest steadily bought the dip. So her average buy price is nowhere near the peak price of the stock. Comment below if you want me to share more of these long-term buy and sell patterns of ARK Invest holdings. Let me know if there are one or two stocks that you're particularly interested in seeing. I can also spend some time calculating their more recent buy and sell prices instead of just the averages across all the time I've been tracking them. If we go back to the table of ARK Invest's combined positions, they bought a lot of 10x Genomics, Square, Too Simple, Twist Biosciences, Twilio, and Roku. They actually did buy a lot more Shopify as well, but it dipped way harder than most of the other stocks on this list, and she didn't buy enough to close the gap, so it dropped down one rank as a result. It's worth noting that a ton of these companies had their earnings this month, like Unity, Twilio, Twitter, Roblox, CRISPR, Shopify, Roku, Teladoc, Coinbase, the list goes on and on. I'm obviously doing my best to keep up, but if you're passionate about stocks and want to help me cover certain earnings calls, shoot me an email or comment below. I just can't cover them all myself, and companies like C Limited and Zoom are reporting soon. If I flip the table, we can see that she sold a lot of Twitter, Iridium, Trimble, Vertex, and Splunk. Twitter and Iridium were both such big positions that even after selling over 70% of her shares in each, they're still in ARK Invest's top 50 holdings combined. Selling those stocks, plus stocks like PayPal and Tencent, are how ARK raised cash to buy their highest conviction dips. If you want access to these data dashboards yourself instead of waiting for me to make videos on them, consider supporting the channel as a patron on Patreon or channel member right here on YouTube. That also unlocks a bunch of exclusive written content and Q&A videos for you. It's a great way to invest in the channel that invests in you. There's one stock that didn't stay in ARK Invest's top 50 holdings after a massive sale that really caught me by surprise, and that's Palantir. If you want to know what I learned by looking at how Cathie Wood sold Palantir out of all 6 of ARK Invest's funds, check out my deep dive video on it right here. I'm also posting more bite-sized content on Twitter, Instagram, and TikTok, so feel free to follow ticker symbol U on whatever platforms are best for you. Until next time, stay long, stay strong, and thanks for watching. This is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.